Hello dear traders, my name is Oleg Prishepa. Welcome to Trading Hero YouTube channel. Today we'll speak about our new updated portfolio for 2022. We already recorded a video where we were speaking in the details how does this strategy work. So in this video I'll briefly stop on the most important moments and mostly focus your and my attention on the new portfolio and its performance for the last 14 years. So let's start from the basic information about what is Trading Hero and who will benefit from using this trading strategy. First of all, you need to know that Trading Hero is an investment portfolio that composed of 7 robots that trade 24 hours, 5 days a week. And the main idea that we actually following with our strategy is to find the positions where the market is extremely volatile or uncorrelated. I will show you later how does it look like on different time frames and different charts. And also, before starting trading on this strategy, we backtested the strategy, and so far we have 14 years of proven history on 99.9 quality quotes that gives us an opportunity to say that Trading Hero is a reliable strategy, and it works good not only in profitable years like when we see that all like stock markets are growing, but also in the years like 2008, like 2015, when we had like deep correction on other markets. Our trading strategy performed well. Like to prove this point, I would like to show you one of the oldest accounts that we have. Also, please mention that Trading Hero actually is a family of trading robots, and now we're speaking about the like basic version of Trading Hero for $5,000, but we also have different strategies for $50,000, $150,000, $200,000, and so on. But the oldest account that we have is Trading Hero for $20,000. And we have the statistic on the real account, so it's not a backtesting history, it's a real account that we started trading in January 2019. So you can see the performance for 3 years. And also, I think you can see that it's not perfect. We have some steps down, we have stop losses in this trading strategy, but it's very important for any trading strategy that uses averaging in its money management system, because if you will not put a stop loss, you are risking to lose all the deposit if the market will have an extremely high volatility. We also can see the performance of each month starting from 2019. We can see that we mostly have profitable months, but we also have some months closed with loss. It's absolutely normal because it's not possible to be winning each month or each day. Like sooner or later, like the market will show you some unexpected things, and you will have to like confess that yes, like in this point, like I was like wrong, or the robot was not counted for this moment. But after each stop loss, we become stronger. We look for new ways to secure our portfolio. We're adding new robots, and we're actually learning from all of the mistakes and market situation that we have. And 2021 was not also exceptional in this meaning. So we had several months closed in loss. In 2022, so far we only started trading at the beginning of February. So we'll take a look how we'll perform this month. But personally, I expect the strategy to perform well and bring us at least like from 50 to 70 or even maybe 100% of profit this year. So let's get back to our Trading Hero portfolio for $5,000. It has a slightly different statistic with like smaller profit because it's recorded for only 2 years, but we see that for 2 years our performance is plus 100%. I think it's a good performance considering that the maximum drawdown was around 30%, and now like we're using 7 trading robots instead of 5, but when we started trading, like this performance was shown by 5 robots. Now we enforced our strategy with 2 additional robots. We replaced the old ones which showed like not very good performance in 2022 and in 2021 and 2020. So now we have like for the moment like the best version of Trading Hero strategy. So let's get back to our presentation and speak in the details how does it work. So first of all, I would like you to take a look at the average annual yield that we have here, and you can see that now we have like plus 77%, comparable to the oldest version when we had like 90 77% like average yield, and the annual drawdown is not more than 24%. So you can see that the biggest drawdown we had in 2021, 2011. I think like we have some kind of like repetition of this situation every 10 years, and obviously 2008 was also not very good for us in terms of a drawdown. It was more than like 50%, but still we closed this year with profit, and this is the main idea of the strategy, like to give you a sustainable income no matter which trend we can see now, what volatility do we see. We can earn less or we can earn more, but still the main idea is to bring you profit from year to year with no extremely high profits like 300% or 500%, but also you will not gonna see any months closed with loss trading on this any year closed with loss trading with this trading strategy, if we speak about the history and the last 3 years of recorded statistic. And the second slide shows us like the real account gain for 2 years and the maximum drawdown. It's the same statistic that we were viewing like recently. And we can see that actually historical statistic and our actual statistic from the real account, they are like a little bit different, because when we trade on the real account we have like in some cases wider spreads, and like the strategy works a little bit in a different way. But if we'll take a look at the percentage like plus 66 and plus 37, like it will be around like 100 and 103%. So we can actually see this statistic, this like profit, approximately the same profit right here. So it means that the way how we trade right now, it corresponds to the historical statistic, and it's good, because sometimes when you're backtesting a trading strategy and then you start trading it on a real account, you have two completely different pictures. In our case, it's of course different, but not for too much. So how does it work? Everything is very simple. We have here we have like two charts that represent GBP USD, I mean the green line, and the purple one represents Euro USD chart. And we can see that in most cases they're following the same trend, but obviously that we're speaking about two different economies and two different approaches to make the like monetary policy and so on. So that's why sometimes they go in different ways, and actually our robots are looking for these situations when this like correlation becomes weaker, and we see that one currency can go like in the like lateral like corridor, and the other can be falling. So the algorithm looks for these positions and uses it as a triggers to open a deal. So it basically sells the most expensive currency and sells and buys the cheaper one. And no matter where market will close, when these like two lines will get crossed, will make a profit, and this profit is equal to the distance between first and the second deal. Of course, trading with two currency pairs, like it's a little bit difficult, because you need to like open two trades and then follow these two trades, and actually we have different scales of currency prices. So it means that 0.01 lot on Euro USD and GBP USD will actually mean let's say like they will be like different in terms of like volatility, because the price is different. No matter if the lot size is the same, the volatility will be different. So it's very hard to calculate it properly. So that's why we decided to replace this approach. When we're trading two pairs directly, we simply dismissed USD from these two pairs, and we got a cross rate of Euro GBP. I think it's more simple to represent this chart as this one. So it actually shows us that, for example, if Euro GBP grows, it means that Euro is stronger than GBP, and it doesn't matter if both of them are falling. Like it means in this case that Euro falls slower than GBP. If we speak about that both of them are growing, it means that euro grows faster than GBP, or maybe euro grows and GBP stays at the same place, or euro stays at the same place and GBP falls. So these like four situations will give us the selling position on these cross rates. So you can see when the currency goes down, we can buy it, and it means that in this case euro is weaker than GBP. So this is the way how it works. But as you can see, you cannot guess the best moment to enter the price. You can guess once or twice, but sooner or later you will face the situation when the price goes against you, and you need to do something with this situation. You can put a stop loss. It's the first decision. The second is that you can average this trade with the order of a bigger lot size, and in our case it gives you an opportunity to close both trades with profit even without waiting for the price to cross the line of our entry point with the first order. It's very important because we have some cases in the market when price can grow and grow, and we can actually see the long-term trend for half of a year or even for a year, and we cannot be waiting for all this time and actually suffer from those losses to be waiting for the market to come back to a certain price. So that's why we are averaging our position if we see that market goes against us. But we also use stop losses in this case because you cannot average forever. There are some extremely dangerous situations when market can be falling for months and months and it doesn't go back. So in this case we use a stop loss. It means that sooner or later, if the market will become like very volatile and straightforward in like buying or selling direction, and we are actually trading against the impulse, we cannot say that we trade against the current trend. We are trading against the impulse because we don't see the full trend when we are, let's say, at this position. We can see only this part of the chart, so nobody knows what will happen next. But if we understand that we are facing the strong trend, we decide to close our position at the best level, considering the back tests, because in some cases potential profit that will be gaining from this chain will be much more lower than the loss that we take from it. So sometimes we decide, if you have the situation that potential loss is bigger, we close this position, we get some losses, and they will be recovered with other robots. If you remember at the beginning of our review, I told that we have 7 trading robots, which means that we have not more than 15% of risk on each robot, and it makes the strategy really sustainable. So this is the way how it looks like. If we'll look at the chart of each trading strategy, you can see that we have different lines here. Each line reflects the performance of a trading strategy, and there were some strategies, this one strategy that failed for 2 times, and we got 2 stop losses on this currency pair. Usually if we have this situation, we completely stop trading with the strategy, and at the end of the year we revise the way how the strategy behaved for all previous years, and if this is the first situation that we made, we can leave this robot to prove its profitability the next year. If you see that something has changed and we found more effective algorithm, we simply replace it with the new one. But if you'll take a look at a global chart, you're gonna see that of course we have these drawdowns shown here on the global chart, which combines 7 charts in one. But it's not crucial here, and you can see that still we got more than $4,000 of profit. It's the performance chart for 2011, for example, and it means that it's not a problem to get a stop loss. It's a problem to get stop out when you lose all of your money. But if you lose 10%, 15%, or even 30%, you still have a chance to resume trading and to win some money from the market. So let's summarize the main benefits that this trading strategy gives you. Then we'll take a look at the performance charts, and I will show you how does it look like on my real trading account on MetaTrader platform. So we have 7 main benefits of this trading strategy. First of all, you will be getting completely passive income. So it means that you don't need to analyze market, don't need to track the news trends. Like we are doing it for you, and algorithms trade absolutely automatically. The second thing that you will get like comparably high profit, because we are expecting for the strategy to bring around like 77% per year. If you compare it with basic like indices, like you will see that it's high. If you compare it with trading strategies, I think it's more accurate. First of all, you need to find a strategy that has such a good performance on history and that has been traded for more than like 3 years at least on the real trading account, and you will understand that of course you can find some strategies that can bring you 1000% per year, but this year they like bring profit, and the next year they get like 10 stop losses, and you simply like turn back on the money you earned like into the market. The third thing you get is a risk diversification, because we have 6 different currencies and 7 different robots that are trading like with different algorithms. The idea is the same. We're trading against the impulse, but the approach, the step between orders, lot sizes, multiplying options, number of trades, and so on, they are completely different with all strategies. And of course you'll be following a systematical approach, so it means that we made backtests for 14 years to show you that we are not guessing where the market will go. We definitely know how we'll behave if the market will grow or fall, and we have checked it on 14 years of history. So it means that we cannot predict all the market movements, but we can predict how we will react on each movement. So we can win or we can get a stop loss, but still considering the history, if the market will not change for the next year and will behave plus minus the same way as he was behaving during these 14 years, will still get profit in the next year. The fifth benefit is that your capital will be working very effectively, so you will almost always have open trades, because like we trade 24/7. The sixth thing is transparency, that you can monitor your trading. You can even create the same monitoring as I like showed you on my FX book, or you can track it from your MetaTrader application from your phone, and you will know how each dollar was earned. It's very important that you are not like trading or investing like blindly without knowing like why you have earned this amount of money, why you got this like profit or loss. No, here you will actually get the full information about the trading account that you are using to invest with our strategy. The seventh point is the investment liquidity. It means that you can actually subscribe or unsubscribe from copy trading with the strategy anytime, and it makes it very flexible. You don't need to freeze your money. If you need to like change something, you simply take a look at the chart. If you understand that like you're around zero or you're in some small profit or loss, you need to withdraw, you can simply unsubscribe, withdraw money, and then like subscribe like once again when you come back. Or if you find that you have some extra money to invest, you can make the same thing. You can actually add money, you can resubscribe with bigger lot sizes and start making money like faster with like doubled deposit. Let's take a look at the history tests. Briefly, I'll stop on some interesting situations we had during these 14 years. So the first chart shows us the last year performance. We actually got one robot that closed the deal with the stop loss, and you can see that the overall performance according to the history was around like 37%. It's not the best performance we can see, but definitely it's better than like getting like zero or getting minus. And I'm sure that the next year like we're gonna see like bigger volatility than we had here, because like volatility is like, if we have big volatility, it's not bad. It's bad when we have like sometimes the volatility is like huge, like we had at the beginning of the year. You can see that like robots were reacting 2008. And sometimes it's very calm and robots simply cannot like make enough of profit to cover the losses, but still like 37% for a year with like conservative risks is a good idea. Is a good option. The next year is 2020. You can see that we had several drawdowns, and before COVID we got some drawdowns, and then we simply stopped trading for a month to wait for the situation to stabilize, and after it stabilized we continued trading, and we earned around like 66% with the maximum drawdown of 17%. 2019 also brought no surprises to us. We have this like smooth chart of growth. 2018 was like plus 73% and 20% drawdown. It's also good. 2017 also nothing special, plus 83 versus 24% of drawdown. 2016 108% and a small drawdown of 21%. 2015 to 122 and 17% of a drawdown, 214. 2014 70% of profit and 20% of loss for maximum drawdown. I think you like by like watching these charts, you understand that each year we have plus minus the same situation. That's why I like the strategy, because it's predictable. There are no like unbelievable like profits of like thousands percent, but there are no unexpected losses of like tens of percents. 2013 plus 84% of profit and the maximum drawdown of 13%. 2012 58% of profit, 14% drawdown. 2011, the year we actually discovered a little bit earlier with these two stop losses, and despite this fact we managed to earn 83% with a maximum drawdown of 32%. 2010 we also had several stop losses, three stop losses, but the volatility was high enough, and we actually managed to make 74% even with 3 stop losses in this year, so I think it's a very good performance. 2009 was also not very successful. We had a lot of stop losses, 1, 2, 3, 4, 5, 6 stop losses, but this year was very volatile, and that's why we managed to make more than 113% of profit. And 2008, I think it's the most interesting year, because it actually reflects some like critical situation in the market, and it shows how does the robot work in this situation. Obviously we can see that there was a huge drawdown of almost 50%, and then we started recovering. Then we got an extreme volatility, and we simply stopped trading for a month, as we did when COVID started. Then we only started trading, and we got into a drawdown, and after it we recovered to almost the levels we had at the beginning of August 2008. So we actually managed to earn 54% with the maximum drawdown of 53%. And if we're gonna calculate all the stop losses that we had, let's do it together. I see that we had 1, 2, 3, 4, 5, 6 stop losses here, and like actually it's it's good like to get 50% of profit when you got 53% of when you got 6 stop losses. And the other thing, for those one of you who wants to maximize the profit, you have an opportunity to actually increase or decrease your risks on your own. We give this opportunity. So if you think that you need to make more, let's say not 77% but 150% per year, you can easily double the lot sizes, and in this case you will be getting 2 times more profit, but your risks will be 2 times bigger. So your average drawdown will grow to 50%, and your maximum drawdown will grow up to 100%. So it means that in case if you'll have an extreme situation like we had in 2008, if it will happen, of course, you will have to add some funds to actually sustain this drawdown. If will be trading as we were traded like previously, like during the last 13 years, including the COVID situation that actually robots like faced in 2020, and they like completely normally made money on this movement. So nothing will gonna happen, and you will be getting 2 times more profit. But like it's up to you to decide depending on your risk no, profit like risk profile. If you want to earn more, you should know that in this case you will be also risking with more. And let me show you the way how does it look like from MetaTrader platform. We now on 1 hour time frame on GBP USD currency pair, and you can see the orange dots showing the entry points on our selling positions. Green rectangles show the clothing result. Blue circles are showing the buying positions, and as you can see, regularly if market is falling, we are trading against this movement, so it means that we are buying, and like we rarely sell, only if we have some like good volatility. The same situation when we are growing, we are selling against this impulse. So you can see that we are actually taking almost all of the movements from the market, no matter in which direction does it go. So it gives us a good opportunity, like not to depend from trend or flat, like we'll be making money independently from where actually we are where we are going. We can also take a look at like some other currency pairs. They all trade the same way. We have like this currency is new, so that's why it's not too much history, but you can see that the global idea is the same. When market grows and grows intensely, it creates a disbalance that must be compensated somehow, and we don't know when it will be compensated, but like considering our profound study of 14 years of history, we can create a net of orders that actually like counts all of these situations like this for 14 years, and like knows where to close this position and where to put each next order and which lot size to use, and so on. Of course, I can show you the year when we got a stop loss and the currency pair that we got a stop loss. It's like NZD to Canadian dollar. You should also know that like some cases we're getting stop losses, and then we see that price like falls down for 200 and 300 pips and goes back, and some of you like may think that, oh, like why should we like close the position right here? Of course, when we see the history, like it's easy to say that, oh, okay, like we should have put like a little bit more risks here, but like don't cheat yourself, because at the like real moment you don't know where the price will go further or will fall. We put the stop losses at exact levels because we backtested history, and in some moments where we were not closing the position, we could get a drawdown not $3,000 but $30,000 or even $100,000, because when you are multiplying your lots one after another, like sooner or later the efficiency of this trading strategy actually goes to zero. So that's why like you need to close it while you don't have a lot of orders, and then move back and cover your potential like losses with like profit that you will get from other currency pairs. So we have like the same logic when we're trading on Australian to New Zealand dollar and Australian to Canadian dollar. So actually you can see like the same idea that like reflects the essence of this trading strategy, that we're using market volatility and situations where the market is uncorrelated to find good entry points and make our money from these moments. So I would like to summarize everything. This trading strategy will be a very good choice for all the beginners, because you will not have to learn the market and actually inventing the buy cost like it was already invented, and you can simply like take it and right to get your profit. Also, it will be helpful to all traders who have their own trading strategies to diversify their incomes, because if you even have a profitable trading strategy, I think you know that some months you can be in loss, some months in profit, and to be in a good emotional state to trade with no fear, with no greed, you need to have a sustainable source of income, and this strategy can diversify your trading. And also it will be useful for investors who like to put the money in some long trades, like buying stocks, buying cryptos, cause you actually can face the situation then when the monetary policy of like Federal Reserve System changes. For example, like this year we're expecting up to 4 times increasing the interest rate, and it means that the market may like slow down to grow, and it means that those of you who are expecting to get some like good growth that we saw in 2020 and in 2021, when actually Federal Reserve System was stimulating the economy, you may not see it, but still you need to get some money, you need to get some stable income, and that's why you should to think where to invest your money, how to diversify it. Besides, we also have a trading signals, signals chart, like to trade manually using like approximately like the same logic if you want to trade manually. But for this automated trading strategy, we have a channel in which we publish a weekly statistic, and we are analyzing the market, and I'm the one who is tracking like the health of this portfolio. And if something like changes, I always like come up with like new videos on explanations what we are doing, what we are like changing, or what we should expect. So it means like that this project is still developing, we are learning from the new market patterns, and you will automatically get all the recent updates depending on how market will behave the next year. So if you're interested in like subscribing to this strategy, feel free to ask me any questions, or if you are a client of Libertex, please contact your personal manager to get an additional information how to subscribe to this trading strategy. Join us and make money together with us. I wish you good luck in trading. See you in our Telegram group with our weekly reviews. I wish you all the best. Goodbye.